In question 3, we're asked to fill out the stockholders' equity section of a balance sheet. And so first thing we're going to list in the contributed capital section, which remember is the equity that's paid in by investors. First thing we're going to list is the common stock, and we always put just the par value of the common stock if there is a par value. And it says up here that the common stock has a $1 par value. This is a brand new company, and here are the stock transactions that happened. We collected this amount of cash by issuing or selling 19,000 shares of common stock, and we'll only put the par value, 19,000, here in the common stock account. The amount that we sold the stock for on top of par, that goes into the additional paid-in capital account. And since we sold the stock for $361,000 cash total, we can take that, subtract the par value, and that gives us the amount of additional paid-in capital. For the preferred stock, that has a $10 par. We issued or sold 14,500 shares. So that's 145,000 in par value going into the preferred stock account. And then what we do is figure out the total amount of cash received by multiplying these two figures. We take that total, subtract the par, and the difference represents the additional paid-in capital, the amount that we received above the par value. Then we just add these four numbers together, and that represents our total contributed capital. Finally, for the retained earnings, we're going to think to ourselves, the retained earnings formula is beginning retained earnings plus net income minus dividends. And because this was a brand new company that just began in January, beginning retained earnings is 0. And therefore, this balance will simply be the difference between the net income and the dividends.